This is your LMAX Exchange technical update for Monday, January 16th, 2017. Euro dollar. So the euro right now is in the throes of a correction, but overall the downtrend here remains firmly intact, and the market should be looking for a lower top somewhere below 108.75, that high from December, ahead of the next major downside extension below the recent 14-year low at 103.41, and towards parity further down. Only back above 108.75 would force a shift in the structure. Sterling dollar. So cable continues to consolidate just off recent multi-week lows. The market has traded and stalled just shy of 120, psychological barriers at 120, but the focus continues to be on a retest of that plus 30-year low from October, down around 118.40. At this point, we need to see a break back above a recent high that we saw around 24.30 to take the immediate pressure off the downside. Dollar yen. So dollar yen is in the throes of a correction after racing up to multi-day highs at 118.67, but there is risk for this correction to continue lower towards the 111.45 area, which is some previous resistance now turns support, before the market then looks to put in a higher low for a resumption of what is now an uptrend and fresh upside extension back above 118.67 and through 120. Euro Swiss. Not much going on with Euro Swiss, but overall here the pressure remains on the downside, and the market is expected to break back below recent support in the 106.50 area and towards the retest of the 2016 low at 106.24 further down. Aussie dollar. So Aussie has seen a major correction over the past several sessions, but the market is now running into some key resistance at 75.25. Don't expect the market to establish much beyond that level, instead favoring a resumption of declines and maybe a lower top or some form of a lower top in here ahead of a bearish resumption back towards a retest of that critical medium-term support at 71.45 further down. Ultimately, if we do see a close back above 75.25, that would force a shift in the structure. Dollar CAD. So dollar CAD has seen some intense setbacks over the past several days, and the market is now coming into some critical support in the 130 area. If the market establishes a close below 130, it would force a more significant shift in the structure to the downside. However, inability to close below 130 will suggest that the market could be still constructive, looking for a higher low and fresh upside extension back above 136 and towards 140 further up. Kiwi dollar. So while we have seen some upside in Kiwi over the past several days, overall it looks like this market is topping out since posting a high in 2016 just shy of 75, and a lower top is now favored, ideally ahead of 72, ahead of that next downside extension back towards a retest of major support at 66.76. SPX 500. No signs of the S&P 500 stalling out just yet as it consolidates just off its recent record highs in the 2280 area, and there is risk for fresh upside now towards next major psychological barriers at 2300. At this point, we need to see a break back below recent support around 2232 to take the immediate pressure off the top side. If we do see a break below 2232, it could open the door and trigger a double top formation, but again, that's premature at this point, and right now it looks like the market is focused on fresh record highs. Gold. So gold continues to extend its very impressive correction after being supported by some critical longer-term support in the 1120 area. This suggests that the market could be putting in a longer-term base now after being supported around 1120 in favor of a resumption of gains that could take us all the way back up towards a retest and break of the 2016 high at 1375. Next key resistance is around 1200, in that we need to establish a daily close above 1200 to get things going more to the upside and strengthen this constructive outlook. At this point, any setback should be supported with only a break and close back below 1120 to compromise this constructive outlook for gold.